Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're now on Wednesday, and this is the 7th of January 2026, and just getting on to 7:30 p.m. Central Time. So, as you know, yesterday I was telling you I expected the markets to pull back in the stock indices, and we're getting something of that. Not tonight, but we had it during the day. There are events today that have taken place. Maybe we should go to the news and then come right back here. So why don't we do that right now? So what you're going to get tomorrow, then put it up here, the Challenger Gray report for corporate layoffs will be out in the morning. You're going to get the October trade balance data. That comes out at 7:30. You're going to get the weekly jobless claims. They're looking for 210,000, up about 11,000. And they're also looking, if you look for the October wholesale inventories data at 9, natural gas storage at 9:30, and Friday's jobs report, which is the elephant in the room and everything. They're looking for it to go up into the 73,000 area. That's up from 64,000 in November. And they're saying that the unemployment rate could slip back to 4.5%, historically low by any standard you look at. The president, as usual, couldn't stay away from his social media platform, and he was going bonkers today. Now he's talking that corporate housing should not be allowed. Let me explain what corporate housing is. It's these companies that go out and buy swaths of homes to rent them out. Number one, today that business doesn't work if you're trying to buy homes at the current price with mortgage rates or interest rates where they're at. Number two, you can't build them to do that because of the cost of the material. So these are homes typically already bought. Now you've got to ask yourself, well, how many are there? Well, in the country, there's approximately, it's estimated 15 million homes for rent, or, and the definition, is that a single family? Is it a multi-dwelling? Let's just call it that's what they're calling it. Approximately 3.5% to 4% are corporate owned. So the president wants to stop them from buying that. I don't think that's the problem in the country. 4% of that number just isn't very big. The other thing the president went after was the defense builders, Lockheed Martin, Northrop, all these, saying big fat salaries for the people that run the companies, big dividends for the shareholders, and they're not investing back in the companies enough and producing enough weapons that the U.S. sorely needs. So he's obviously frustrated, and he's making it known what that is going to be. What will come of it? Well, I can tell you this. The big companies that had the homes, they were down 9.5%, 10% after market today. So they are on his radar, and that's a bad place to be. We all know that, and we will see just what happens here. All right. So that's the news of the day. Now, as we take a look, you can see the dollar still coming up a little bit here. It's not acting too bad. Most currencies are slipping, and I expect that you're going to be churning around as we get into the elephant in the room, the jobs report. And after that, I think the air starts to clear in the markets, and I think it gets a lot easier to start trading them. That's my own opinion, but it's where I do think it's going to come to be. When the S&P 500 index is over the 18-week average of closes or the daily. Now this chart is actually a weekly, and I have on it here, it says day, and it's not. It's the weekly chart. So all you have to do on my charting software, if you have this, is come in here and I go week. There we go. So there's the weekly. When it's over it, I have a bullish bias. You can move your lines around, do it just as I'm doing. Pretty easy to do, and it gives you an idea of where you're at. So that should give you an immediate bullish bias to the market. When you come into the charts here, I pointed out yesterday that this area, right through all of here, is a resistance zone. You've got to keep your eye on it, as the market's going to be able to just punch through it and keep going. I also said, it is very typical that January's got a strong start to it, which it's got. It's typical, according to Citadel, that the first 2 weeks are often up weeks. That doesn't mean every day, but overall that they're looking for. And the more research says that the market typically goes up in a strong percentage most of the time, and I'm talking well over 80% of the time, from December 18th, 19th until the middle of February. So it just gives you an idea of the biases in the market. When we take a look at are we trending, we're not right now. I'm not blind. I see the market made a higher high, but the pattern is one of a lower low, then a spike to a higher high. The market has an upside bias on a daily chart. As you saw me fix the weekly, well, on the daily now, if you look at this as to where it's at, you're over the 18-day average. So I look for the market to fight a battle there. Could the market go to the Bollinger Band? It could, but it's going to have trouble because the last rally high was here at 70.15, and that comes in with the upper band. And given that the market is overbought, even if it gets there, it could be short-lived. When I look at the NASDAQ is similar in its pattern. It's overbought if you look at slow stochastics. It has upward bias, and it's got a pattern of a lower low, higher high as well. When we come to the Dow, you keep hitting the upper Bollinger Band in an overbought condition. That generally stops the market. That doesn't mean it turns into a bear market. It's got upside bias, but it corrects a bit. When I look at the Russell, maybe it can reach for the upper Bollinger Band. Could. This market's getting a bid in part because you're not far from contract highs, which it hasn't made recently. Number two, if interest rates fall because of weak jobs report, this is the market that gets the benefit of that. These type of companies need lower interest rates, and those could come about via the Fed cutting rates. So that's the hope. As you know, I said the DAX, I think, is going higher, and it's been doing that. It's riding the Bollinger Band higher, and it's embedded. It's a very strong market. In the 10-year notes, the 5, the 2, I just think you want to be sidelined, let the report come out, and then we take another fresh look. The dollar index getting a bid off of number one geopolitical events. You saw that the U.S. today has taken capture supposedly of 2 more tankers. They finally got that tanker that made a run for it out of Venezuela, and Russia has threatened the U.S. that it's a Russian tanker. Well, it wasn't when it left the port. That I can tell you, it wasn't Russian. Suddenly it became Russian. We'll see what goes on. Trump is saying that every tanker that they capture, the U.S. is going to take that oil, period. So we will see. I don't know if that money will go back to Venezuela or if the U.S. are going to take the oil. But something's happening there. So he's letting the world know what's going on. In the eurocurrency, as the dollar goes strong, 57% of the dollar index is made up of the euro. So you always want to pay attention to what's going on. They flip-flop on each other. In the Japanese yen, I'm surprised the markets haven't made a new contract low. Markets like to test central banks. Now, you'll say that's fighting them. It's not what I said. They like to test them. And when the bank said here, oh, they're going after currency traders, do you remember that? You got your bounce, and now that's fallen to the wayside. So very slowly, the shorts start working their way back in the market. That's been my experience. In the micro Bitcoin, we have a market that got up 3 days ago to the upper Bollinger Band and has backed off. I have said and continue to say I think the 84,000 area is your near-term bottom. On the energies, I don't know what to do with them. There's no follow through up or down. You see that in the whipsaw that you're getting right now in prices. You see it here in WTI. Example, the low here on this day was 56.31. Then you go up $2.50. Then you come crashing down from 58.87 back to 56, back to 55.76. Why get involved in that? It's not offering you a trend trade at this point in time. Where the trend trades are is in the heating oil. The market is developed, gone back into a bearish embedded reading. If you were to get a hard rally tomorrow, I think the pros would greet it with open arms to sell into. In natural gas, oversold, ready for a bounce, maybe as high as the 18-day average. We'll see what it's going to do. But again, if you've taken my embedded course, and it's so important, it teaches you that when you hit these bands, what to do with them, at least from my perspective. And all my courses are now 50% off, as you can see. We have different packages of all my research, 50% off. Give it a try. Let's assume that I come up with an idea that you like and back it up with the charts. I do my morning subscriber videos with much more detail than I do here. This is the introduction. It's meant to get you into our subscriber package. It's the first thing I want you to understand. It's no different than what Kramer or other people do with CNBC. The meat is always what you pay for. So spring a little bit. It's not going to break the house. And I will talk to you later. You go to iraepstein.com under research or courses. The computers are already set for the discount. You can move your cursor up here for an icon or click on this one if you're watching right now. Us on YouTube. In the meantime, hope you watch the other videos tonight, and I will catch up with you tomorrow morning. Take care.